I'm Jason Jessup, the CEO of Magna Mining, and Magna is a producing copper company with a portfolio of development projects in the Sudbury Basin.
A producer. Feels good, right?
Feels great.
Well, those companies are getting rewarded at the moment with those kind of profiles because the Explorcos, that's a bit of a struggle. It's a bit of a struggle.
Yeah, and it's a, you can never really predict when you're going to make a discovery. So there's a lot of uncertainty. And, with us, we have a plan. We have a plan. We're executing the plan, and we're going to generate revenues, and we're going to reinvest profits back into our projects. So we're pretty excited about it. And we have some great exploration properties that we're exploring, and will, we believe, come out with some great results.
Well, let's start with the thing that makes the world go around. That's money. You raised some money recently as a kind of convert. Is that right?
Yeah. So we raised a convert, $22 million,
right,
and $10 million in equity on top of that. So
okay.
$32 million, and plus there's a shoe, so it may be a little bit more than that when we close it this week.
Right, okay, and as a producer, you can do converts now, isn't that great?
That's right.
Just to remind ourselves, we'll keep saying the word producer a lot during this conversation. Right, well, we better kind of go back some, because I think 2023 through 2024 it was a sort of difficult market, certainly for retail type stories. You kind of evolved your model. We were nickel, we're now copper with some nickel and some other stuff as well. So when you look back now, how important was it to make that decision? Where would you be without it?
I'll be quite frank. We've always sort of stuck to our guns that we're Sudbury. And Sudbury has a lot of great nickel deposits, but it also has some great copper deposits. Back in 2022, we acquired a Crane Hill project. We came out with a resource on that. And Crane Hill is largely nickel. It's got a great nickel ore body, and it's got some copper with that. But we definitely got viewed very much as a play on nickel. Now with these new acquisitions from KGHM in Sudbury, we're acquiring some spectacular copper footwall deposits. And so, the pivot was sort of a natural transition because of this acquisition. It wasn't sort of planned that we're skeptical about where nickel's going, so we need to do something different. It's been in the works since the inception of the company in 2016,
right.
Really. I saw these assets within KGHM, which were formerly the FNX assets, which myself and many of our team worked for FNX on these properties, as one of the reasons really to found Magna. So it's been a long time coming. It's great to have this deal have closed now.
Yeah.
And for us to be in control of the producing McCreedy West mine and then the Levack mine, the Podolsky mine, former producers under FNX and Inco. So extremely exciting. Yeah.
Yeah, for sure. I'm sort of intrigued by the mentality there. Like some people go, I'm a copper company, right? Or I'm a gold company, I'm a whatever company. It's like they kind of forget about making the money bets. And you're very much focused on, no, we're a Sudbury company. There are assets here which I think we can commercialize. We're a money company. We're going to focus on making money. Was that the mentality a bit?
That is the mentality.
Yeah.
100%. We've never been driven by a commodity.
Yeah.
That we believe so strongly in this commodity, we're going to commit to that commodity.
Through thick and thin and life and death.
Absolutely.
Sometimes.
Yeah. What we've really committed to is Sudbury and the deposits in Sudbury, and Sudbury as being one of the greatest mining camps in North America and arguably in the world. Been mining for 125 years. It's got all the infrastructure. It's got the people. This is really what we're leveraging. And having experienced a very successful junior in the past with FNX, it's a business model that we know we believe in, and that's what we've been committed to. And, we will mine nickel in the future. When nickel prices go up, we can turn on some of the nickel deposits. But in the meantime, there's great margins in the copper ores, and that's where we're going to focus, and we're going to make money, and we're going to reinvest that money and keep building out our projects. Yeah. It's what we set out to do, and now we're doing it.
It's interesting, just that one thought kind of redefines the ability to, be commercial. Yeah. In a very difficult market, and we've seen a few companies try to pivot and change, but it seems to be, I'm going to be a lithium company, and I'm not going to mine antimony. Mm-hmm. That's the kind of big thought process. It doesn't kind of work like that. Okay, let's talk about the assets. Let's kind of run through them because there are various phases of development, production and development. So, number one asset being
McCreedy West.
McCreedy West, right?
So McCreedy West producing. It was an old Inco mine operated for about 25 years by Inco. They shut it down in the late 90s. FNX acquired it, restarted it in 2003, and it's basically been running continuously since then. It's one of those mines that always has 3 years of reserves in front of it and keeps running. We think it has a lot of future in front of it, and later this year we'll be able to give some forecasts and guidance, and we'll put out reserves at the end of 2025.
Okay, and some of the money which you've just raised, and will soon be able to allocate, how much of that is to kind of help with McCreedy West, evolve this kind of resource base so it's more than 3 years? Because the market, certainly when you kind of get into the sort of register and investor base that you're going to start attracting, they're going to want to see that number rise up, aren't they? 3 years isn't going to be enough.
So there's a big resource there. Right now, there's a total of about 9.3 million tons. So the mine's been running at about 300,000 tons of ore production a year. We think we can get that up over the course of this year, call it 400,000 or 500,000 tons per year. Historically, with FNX, we operated at as much as 700,000 tons a year. So it's got the capacity. It's got a 9 million ton resource. About 5 million tons of that is our 700 copper zone. So this copper mineralization we're focusing on. So I think when we do come out with reserves and a life of mine plan, people will be pleased. It will look good. But about $5 million of what we've raised is what we've allocated for sustaining capital this year at the mine. Now that number might change. It may go up or down. But that's right now what we're looking at investing to increase development, open up new workplaces. We're going to grow the team there, so we're doing some hiring and probably bring in a little bit more equipment. Right,
and can we talk about margins, because how much are you currently producing? You're going to give guidance at some later point about where you want to get to, but making money is the difference between what it costs you and what you can sell it at. So what does that profile look like, or going to be able to look like?
Yeah, and again, we can't say too much at this time, but I would say it's a pretty reasonably healthy margin. The philosophy previously with the previous owner of this mine was really about bulk mining and tons based. We're going to focus on metal pounds in the rock, so grade, and I put a lot more focus on geology control, making sure we understand the geology. This is a copper footwall deposit where you have a Sudbury breccia, and I've spoken about this rock unit. It's really important in Sudbury, but you have class of country rock with veins of massive sulfide wrapping around them. And you have to really understand the geology if you want to have good grade control. That's one thing we did really well at FNX. Some of the people on our team from Magna who worked at the McCreedy West mine before understand this very well. So that's something we're going to focus on. So we're not going to be just tonnage based. I did talk about 300,000 tons, 400,000 tons. In 2023, they mined about 1.6% copper. I'm really pushing and challenging the team to increase that copper grade. Again, in my experience running the operations there with FNX, out of this 700 complex, we were producing 4 to 5% copper. So same deposit, just mining more selectively, a lot more grade control. And when you're paying a fixed price per ton to process it at Vale's mill, the more pounds of metal in every ton gives you a better margin. It's pretty simple.
And where we're starting from now in terms of being able to understand the geology, et cetera, are you starting from scratch?
No, we have a lot of knowledge. Again, our VP of Mines Geology, Munir Hoxha, he was the chief geologist at McCreedy West for FNX for 10 years. So, it's great to have him back at the mine. The people are actually really excited to have him back at the mine. So we have a really good understanding. Now, we are pushing out to some parts of the deposit that weren't mined by FNX. So we're doing the drilling, we're doing the interpretation, understanding where these copper-rich veins are located, and designing stopes around them. So it's a continually evolving understanding, but on the micro scale, on the macro scale, we understand it very well.
Right. Okay. So what you've got to do that. So that's $5 million. In fact, let's go back to the capital allocation. $32 million. It's rare it's going to raise more money than you need. So you must have a view of what you want to do with this.
Yeah. So we did raise a little bit more than we expected. So we started off to raise $25 million, $15 million in a convert, $10 million in equity. And that would give us, working capital, which is, again, starting this operation, the way the deal's structured. The ore we're shipping on day one, it's a number of months before we actually get paid for that. So you have a working capital that you need to manage. So some of it will be used for working capital. Now, we did upsize the convert because we had a lot of demand from some really good investors, including a couple of our existing investors who took a big chunk. Yeah, they're very good. But we're really concerned about making sure we have the right investors, and we've always done that.
Right.
We're not going out to market this convert. We didn't market it to hedge funds, for example. We want people who care about the equity.
Yeah.
They care about the equity, they're long-term, and they see it as a good opportunity where they can get a yield, but also have a very fair price. And it's a 4-year convert. So,
Okay.
you know, we're looking for long-term investors that want to hold the equity once that converts. So, yeah, we upsized it to 22 million, which gave us a bit of a buffer and some comfort. And again, we believe this will get us out into 2026. And what we want to accomplish in 2026 is the restart of Levack mine, which is next door to McCreedy. And I would say that's our sort of second priority in 2025 is develop a restart plan for that mine.
Right. I'll come on to that in a second. Where's the money from? Is it all Canadian?
No, it wasn't all Canadian. I would say a big chunk of it was from existing investors like Dundee Corp, who participated in a big way. They thought this was a great opportunity for them to, further invest in Magna. So they took a big chunk of the convert. We had a few U.S. funds, a couple European funds. I think we had one new fund.
Yeah.
But a number of existing ones.
I was talking to a company yesterday, and they raised 60% of the money. It's a Canadian company, Polymetallic. 60% of the money from Australia, 30% from Europe. I just wonder what's going on in Canada at the moment.
Yeah, I've heard similar things. And I've had a few meetings. I was in Miami for the BMO conference last week, and had some great meetings, and with some Australian funds who are very keen on copper and keen on Canadian assets. So yeah, I think there's a great opportunity. We are not looking to raise money right now, but we'd love to get some more exposure and do some marketing in Australia and some other markets in Europe as well. We have a great story now being a producer, I think, in a larger company than we were a year ago. We're definitely, I think deserve to have some more eyeballs on the story and tell that we're not as well known as I'd like.
Okay, let's move on to asset number 2. Because that some interesting numbers coming out of that.
Yeah, so Levack mine
crazy
is a mine that I ran as well and developed. So at FNX, we discovered what we called the Levack footwall, renamed the Morrison deposit. Yeah. And that was a super high grade copper footwall deposit.
Give me some numbers. So
we were, some of the holes we would drill would be 14 meters at 23% copper and 20 grams and, great intersections. Typically, we would mine, while I was there, from 2008 to 2011, consistently 10% copper, 8 to 10 grams precious metals, and 1 to 1.5% nickel, month after month after month. That was our production grade.
How does something like that ever close down?
So, a good question. So they mined a lot of this portion of this Levack footwall deposit. They probably mined 3.5 million tons out of it approximately. In 2019, KGHM had mined down to a level where they just, the veins were getting a bit smaller. They needed to go to more selective mining methods, and they would have to get away from long hole mining, which was their primary mining method. I think the decision was just made at that time. We're not going to invest any more capital in driving the ramp deeper and continue to develop this. And at the production level with these narrower veins, less tons, overall probably less copper. They put it on care and maintenance. Now, there's still opportunities. There's a historic resource on it that we will update on that Morrison deposit. Historic resource is about 700,000 tons at 4% copper, percent nickel, and about 5 grams. But what really gets us excited about it is we've started drilling this weekend at Levack mine on surface to drill the up dip of this breccia package that hosts the Morrison deposit. And this breccia package comes right to surface. And there's a small zone that FNX discovered near surface called the Keel Zone. So we're drilling that right now. And the Keel Zone is sharp-walled, massive chalcopyrite veins where you can see, historically in this small area that was drilled, and it's open and down dip as well as to the east, tend to as high as 30% copper, and with precious metals and a small amount of nickel. So very, very copper-rich veins, sharp-walled. And as we've been working on closing this deal, our geology team has been doing detailed interpretations of this breccia unit, looking at historical drilling, understanding the controls of where you find these
Right.
deposits, because the entire breccia unit is not mineralized. There's traps. So we are excited to be drilling there. It is super high grade, and this is what will go into our restart plan for Levack, which
Right.
our target is to restart in 2026.
Okay, 2026. Okay, and when you say you're getting after it, how many drills, how much money, how much time are you going to spend on doing that?
So at Levack mine right now, we have a budget of about 15,000 meters.
Right.
One drill turning now, another
Okay.
drill starting next week. Probably within 2 or 3 months, we're going to want to set up a drill underground. We're drilling
Yeah.
from surface right now, but the Levack mine is completely accessible. It's a secondary egress from McCreedy West.
Yeah.
There's about 12 people who run the mine right now, keep the shaft open, go underground. There's also a neighboring mine that Glencore's developing that use it as secondary egress. So yeah, it's an easy place to get a drill underground. We just need to understand where we want to drill from underground. And then we'll be drilling shorter holes, which would be great for delineating this breccia corridor.
Okay, so these are not really huge campaigns taking time. This is kind of a quick turnaround. You get the data, it informs how you get after this. So you must be sitting on a bunch of existing data. I know you've got people who worked there before, and you did. But where's that data set sitting at the moment?
Oh, it's immense. It's immense. So the Levack mine is one of the oldest mines in Sudbury.
Yeah.
Produced for over 100 years, produced over 60 million tons of ore. So you can imagine how much drilling has been done there. So we have more than 1 million meters of drilling. It's incredible. And some of it's, recent from the FNX years. A lot of it's historic. But that allows us to put together a very good understanding. The other great thing is we have fantastic neighbors in Glencore and Valley who are cooperative and want to work with us. And we have ore selling agreements with both of them.
Yeah.
So they want to see Levack mine restarted and are willing to share data and help understand what's happening on a bigger scale around our property, which helps determine where we're going to drill on our property. And on both sides of the property, there's been mining going on for many, many decades. So it's a great area. Our geologists have a lot of fun.
Yeah.
One of my favorite things to do when I have time in the office is to sit down with them and let them spin around the models and show us what are these controls and where we have our highest grades, and then where can we target more of that. So it's fun. It's a great data set.
So tell me, where does this go, right? The stock reacted really well last year, up more than 3 times the last 12 months, we'll say. So people are buying the story. They like the fact that you're moving very quickly into a producer category. There's more to come. The grades are insane. It really helps, and you're sort of building up this picture of like, I want the most contained metal possible for everything that I truck over to the plant, right? What more? Where does this go? You've got access to capital. It seems, and that's a luxury in this market. But people got to buy into what the future holds after these kind of immediate plans. So what's in your head?
Yeah, so we have, with this acquisition now closed, we have 5 permitted projects in Sudbury. So we have McCreedy, which is producing, Levack on care and maintenance, the Podolsky mine, which is on care and maintenance, another great high-grade copper mine with some deposits that are unmined and partially developed. We have our Crean Hill project, which is amazing. Another low capex, advanced stage permitted project.
Yeah.
And then we have our Shakespeare project, which is an open pit with permits to build our own mill. So alongside all of that, we have another pending acquisition that we announced with NorthX acquisition of a portfolio of exploration properties. Some of these are, next door to some of our existing properties, so very complementary. But there's a lot of exploration on that ground as well that we're seeing. So where are we going?
Yeah.
We are going to use cash flow, future cash flows from McCreedy West to reinvest to restart Levack mine.
Yeah.
Hopefully start mining some of that very high grade footwall copper with very potentially high margins. Use that cash flow to restart Crean Hill.
Yeah.
Crean Hill would be our next one. And probably shortly after that, we'd look at Podolsky. So theoretically, in 4 years, we could have 4 mines generating revenue and ramping up to commercial production.
And how do you kind of keep that? How you can make it sustainable? Because like plowing the money back in the ground is not an attractive proposition if they're kind of short life of mine, right? You got to say, right, we're going to get revenue flowing. So we're not asking you for more money, dear market. We will also spend the money to extend the life of mine of these projects, and we'll be doing exploration, which is maybe not being rewarded in the market at the moment generally, but it will also fulfill the role of extending the life of these mines as well. So this is a long, sustainable business model that we've created here. Is that what I'm buying into?
You hit the nail on the head. It's a business model. It's a business plan, and that's exactly what we're going to do. And the great thing about it is, all these mines, McCreedy West, it's got 45 years of operating history and still 9 million tons. Levack has a large historic resource, over 7 million tons. We believe that's going to grow, and we will put out a compliant resource later this year. But it's produced over 60 million tons. The Podolsky mine is actually one that still has a significant historic resource, somewhere in the range of 7 or 8 million tons, but is probably one of the most underexplored properties we have. And so a lot of potential for growth there. So we do believe that just continually by drilling, we'll expand resources, replace reserves year over year. And I believe that these assets, combined can have multi-decades of mine life. And we want to really build a significant producing company. This isn't about, now we're a producer, we're done.
Yeah.
It's not even about bringing Levack on mine and we're done. This is about building into something that's significant in Sudbury. And within 10 years, maybe we've done what we can in Sudbury and it's generating cash flow. And now we'll look outside of Sudbury for our next acquisition, how we're going to grow. But we have a business plan, I think, that can support that. And for the next 5 to 10 years, it's going to be all focused on Sudbury. We will make other acquisitions. That's something that we're committed to doing. There's other non-core assets in Sudbury that would make a lot of sense with us, to where we could leverage the infrastructure we have to bring deposits that are non-core to their owners into production. So that is one of our goals, and another way we will grow our company. So the future is very bright, and it's going to be all based on McCreedy West doing well. So in 2025, that's our focus. We're not going to try and do 10 things at once. We're going to do one thing really, really well this year,
because it's
and
the
then
key.
grow from that.
People ask me why I challenge company CEOs about the business models, and this is why I do it, because those ideas make companies or break companies. So Jason, great to hear what you've done, and congratulations as well. Not just for what you've done so far, but what you're about to do.
Yeah, no, I appreciate it, Matt. And I always think back to our first interview when I was this sheepish new CEO that said, we're going to buy non-core assets in Sudbury and create a mining company. And it's great to sit here today and say we're a producer.
Good man. Thank you.